Big changes are coming to taxes in 2025, and they could either save you thousands or cost you thousands in retirement. In this video, I'm going to break down what's changing, how that impacts your income, and clear up some common misconceptions so you can keep more of that hard-earned money in your pocket. Welcome back, and if I haven't met you yet, I'm Christian Klassen. I own 402 Financial, and I created this channel to help you make the most out of your retirement. The first big change for 2025 is ordinary income brackets. Now, ordinary income tax brackets are perhaps one of the most misunderstood concepts in the tax system. And this is where a lot of people are under the impression that when they're in a certain tax bracket, all of their income is taxed at that same rate. Now, that's not how it works, so I want to clear this up. But I also want to compare the 2024 tax brackets to the 2025 tax brackets, so you can see how these changes may impact you for the year. We'll begin with the single filers, and then we'll turn our attention to married couples. So we can see here the shift from 2024 to 2025 shows only a slight increase of about 3%. Now, this is actually one of the smallest increases in the past couple of years. They say inflation is cooling, and it looks like these adjustments are reflecting that. But what do you think? Is inflation really cooling down? Now, I want to make this clear. Let's say you make $48,476. It doesn't mean that whole amount is being taxed at 22%. The first 11,925 of your income is taxed at the 10% rate. Anything over 11,925 to the next threshold is at 12%, and so on into higher brackets as your income increases. I think it's important to know this because I frequently hear individuals say, "Oh man, I made 150,000, so I'm paying 24% on the entire amount." That's not true. Only a portion of your income falls into that 24% bracket. If you wish to pause the video here to take a look at the single filer tax bracket, please do so. Otherwise, let's look at married filing jointly. Again, the 2025 changes here, they're pretty modest, just a little bit of an increase in the tax brackets. You can pause the video here if you want to review the married filing jointly brackets. If not, let's move on to the next thing. The second big change in 2025 is the standard deduction, which directly reduces how much of your income is subject to taxes. For 2024, here's what the standard deduction looked like. $14,600 for single filers, almost $22,000 for head of household filers, and $29,200 for married filing jointly. Now, looking ahead to 2025, the numbers increase slightly, about $15,000 for single filers, $22,500 for head of household filers, and $30,000 for married couples filing jointly. In 2025, the additional deduction for those 65 and older increased a little bit, $2,000 for single filers or head of household filers, and $1,600 per spouse for married couples filing jointly. Now, while these increases may seem small, they can make a difference. For some, these increases could potentially save you hundreds in taxes. And these changes are especially impactful if you don't itemize your deductions, as most retirees tend to use the standard deduction. The third big change that's worth mentioning is the new capital gains tax rates. For those unfamiliar with capital gains, it occurs when you sell an asset, like real estate or an investment, in a non-retirement account for more than what you paid for it. For example, let's say you bought a stock for $10 and now it's worth $25. It's a $15 gain. If you sell the investment within a year of buying it, that $15 gain would be considered a short-term gain and taxed at ordinary income tax rates. But if you hold the investment for more than a year before selling that $15 profit, it's considered a long-term capital gain, which is taxed at special lower capital gains rates. Now, capital gains tax rates depend on your taxable income, which includes sources such as wages, Social Security income, interest, IRA distributions, and so on. This is where things get a little complicated and where I see a lot of confusion. Ordinary income can push you into higher capital gains brackets. The reverse, though, isn't true. Long-term capital gains don't push you into higher ordinary income brackets. So in 2025, long-term capital gains are taxed at 0% for incomes up to about $48,000 for single taxpayers and $97,000 for married taxpayers. And then above that range is taxed at 15%, up to about $530,000 for single taxpayers and $600,000 for married taxpayers. Then above all that is long-term capital gains, and they're taxed at 20%. And this is why planning can be so powerful, because if you plan your income right, you can create a retirement income while staying in the 0% capital gains bracket, which I plan to do a video in the future. So if you haven't yet, subscribe so you don't miss it. Let's talk about one of the most unforgiving brackets retirees face, the Medicare premium surcharge, better known as IRMAA. Here's the catch with IRMAA. Even exceeding the income threshold by as little as $1 can mean hundreds of dollars in extra Medicare premiums every year. Yet most retirees have no idea what triggers this surcharge. So just imagine the shock of learning you owe an additional $1,000 just because you took a little too much out of your IRA or received an extra dividend payment for the year. The good news is that it's totally avoidable with the proper planning. Here's how IRMAA works. IRMAA brackets are based on your modified adjusted gross income from 2 years prior. So for instance, your 2025 Medicare premium is based on your 2023 modified adjusted gross income. This includes from the following sources such as dividends, wages, tax-exempt interests like income from municipal bonds, even a business sale. So in 2024, single filers paid higher premiums when their modified adjusted gross income exceeded $103,000. And for married couples filing jointly, that threshold was above $206,000. But going over that initial threshold added $70 a month to Medicare Part B premiums and $13 extra per month to Medicare Part D premiums. That's an extra $1,000 a year, even if you exceed this threshold by $1. And if you're married, these extra charges apply to each spouse, meaning the cost doubles for your household. Now for 2025, the IRMAA thresholds have increased a bit to $106,000 for single filers and $212,000 for married couples filing jointly. Now, while this is helpful that these thresholds are adjusted, the surcharges themselves have increased too. For 2025, exceeding the first bracket translates to an extra $74 per month in Medicare Part B premiums and a $14 per month Part D premium hike. That's about $1,056 in extra premiums for the year. So it goes to show IRMAA surcharges can be expensive, but with some proper planning, you can usually avoid these thresholds. And you can save a lot of money in retirement by taking proactive steps to control your income, such as timing capital gains or avoiding big taxable events 2 years before you apply for Medicare. And there you have it. Those are the big tax changes coming in 2025 and how they could impact your retirement. Whether it's understanding tax brackets, understanding the standard deduction, increasing capital gains, or avoiding IRMAA surcharges, the bottom line is that understanding these limits and taking proactive measures can save you thousands and help you keep more of that hard-earned money. If you found this video helpful, please give it a thumbs up, share it with somebody that you think might benefit from it, and be sure to subscribe so you don't miss another video. If you're ready to take a look at your retirement plan or would like some help navigating these tax updates, I'd love to hear from you. Click the link in the description below to schedule a free call with me, and we can ensure together that you're on the right track. Thanks for watching and have a great day. I'll see you in the next video.